Good on Dragion Radio. I'm your host, M.L.Ruscsak. I'm here with my special guest, David Lewis. Welcome.
Hi, welcome.
Now, you actually do one of the products we don't talk about very often as a society, but yet it's very much needed, and that's life insurance.
Yes.
So we're going to break it down a little bit, because it doesn't matter if you're an entrepreneur, an author, or just need it in your daily life. Life insurance is something you should have.
Yeah, I think for most people it makes sense. It really depends on, and I hate to. I mean, that sounds like a cop out, but that whole it depends. But it really does depend on, kind of your long-term vision, goals, and long-term financial goals. I hate to say that there's somebody that doesn't need it, but maybe somewhere out there is somebody that doesn't need it. I don't know. I haven't met that person, but maybe hypothetically maybe they exist.
Okay, the hypothetical, maybe there is someone that doesn't need it. We'll go with, okay, they don't need it. But in general, most people need it.
Yes.
And if you're a business owner, you really do need it, because what happens to your business if suddenly you're not here?
Right. So that is a that's I think that is sort of like the base case for life insurance, right? So nobody really knows when they're going to die. That's not something that you spend all day every day thinking about. And so but that risk always exists. And the older you get, obviously, the higher that risk becomes. So somebody who's in their 60s, obviously at a higher risk of dying than somebody in their 20s and 30s. Right. So that's like the base case for life insurance. You're hedging against, it's just like every other insurance. You're hedging against the risk of loss. What's my risk? Do I want to cover that risk? And then that determines how much insurance you buy.
Right. I mean, you don't think about it too much. With 2020, I think a lot of more people are thinking about it, especially business owners, because we have the whole unknown now. We have this terrible virus out there. Now, that is right on our brain, because now we are thinking about it.
Yeah. So 2020 is sort of an anomaly in terms of life insurance, because a lot of people, that sort of woke people up to the idea that, maybe I should take out a policy. Maybe I should apply and find out. It really did bring it to the forefront of people's minds. And, I wouldn't sit here and say that, what happened in 2020 was a good thing, but it is interesting. I would say it is interesting that it kind of woke people up, and probably a lot of people who needed to be woken up, because, they live in denial. They don't want to think about the idea that maybe they might not be here.
Right. Now, a lot of your clients, according to your website, are people that really, you get the ones that don't think they need it or don't want to spend thousands of dollars on life insurance, but yet you get them to see the advantages of having it. So what are the advantages other than okay, I'm not here, so who's going to pay my bills after?
Yeah. So like I said, so that's kind of the base case for life insurance is talking about what's going to happen when you're not here. And so really, the benefits, there's a couple of different ways you could look at it. So, just like, as we just talked about, the main benefit or the primary benefit is, if I'm not here, who's going to take care of my dependents? I mean, that's kind of the very basic benefits of life insurance. And that can usually be covered by something called term life insurance. So term insurance is simply it's a financial product that covers the risk of your death. And so you can buy that in a 1-year term, 5, 10, 20, 30 year. I mean, they have all different kinds of products, right? So you could buy it for whatever term that you want. The thing with term insurance is that it's always going to be a short-term product. So it's always going to cover the short term. And then on the other end of that continuum is whole life insurance. And whole life insurance covers you, as the product says, for your entire life. So the difference between those two products, though, is that term insurance is primarily about making sure that when you die, that there's money that is left over for dependents or beneficiaries. Like if you have a business partner or something, that there's money that his family can then, or her family can buy out your share of whatever you had invested in the business, so that that your family doesn't, sometimes you see situations where the families that didn't intend to be in business with someone else ended up in the family business or in a business, and that's not really what they want, that's not where they belong, and there's no easy way out of there, because those shares are valued at a certain amount of money and they need a buyout, they just don't have the money. And so life insurance is like that ticket to get out of that business and provide the money so that people can be bought out of the business after the business owner's gone. When you're talking about whole life insurance, which constitutes a lot of my business, it's not just about the protection against death, financial protection. It is also fundamentally about saving a long-term savings, a savings that will last literally your whole life. So you start paying premiums into a policy just like you would with term insurance. And then over a long period of time, savings accumulates. And that savings is there for you when you need it. So it's considered a guaranteed form of savings. And so as the premiums are paid and as the savings goes up, the amount of insurance actually goes down, and the savings effectively replaces the insurance. So the goal with whole life insurance is to hedge against any risk of loss of your income, which would then prevent you from saving money for long-term financial goals. So for business owners, it is providing capital and cash flow when they need it, which anybody who was alive last year knows that one of the big reasons why businesses didn't really make it, the businesses that struggled and didn't make it, was lack of capital, lack of cash flow. All of a sudden, their business was shut down, and they had 2 to 3 weeks worth of cash, no insurance, no savings really saved up in a savings account. So they had nothing. They had no way to sustain the business.
Right. And we see this a lot. And people don't understand you can borrow against your whole life insurance.
Yeah, so that's one of the key benefits of whole life, is that you can go and you can take out a loan against the policy. You can also do what's called a partial surrender. So you can either effectively withdraw money back out of your policy if it's set up for that, and it has to be set up in a very specific way for you to do that. But you can either withdraw money or you can take out a loan against it. And the loans from life insurance companies they work very differently than loans that you might get from like a bank or a credit union or some other place. So when borrowing against the policy, the insurance company gives you basically two things that you can do with it that you can't do with other types of loans. Firstly, when you don't need to qualify for the loan. You basically just need to call them up and say, hey, I need some money. And if there's enough cash value in your policy, like if you have $10,000 in cash value, you can borrow up to $10,000. If you have $100,000, you can borrow up to $100,000. You can borrow whatever it is your equity is in the policy. And you don't need to really, once the policy is in force and once you have been making these premiums, you don't need to beg to the insurance company to borrow back the money. The other thing is that when you do repay the loan, secondly, you don't have to repay the loan. So there's no strict repayment terms. So nobody's going to come knocking on your door and saying like, hey, you owe us money. Because all of the loans are secured against the cash value. So all the loans are basically secured against the money that's already there. So they already know where they're going to get the money from. If you don't pay the loan back before you die, it just gets subtracted off of the death benefit. And then the other thing is, if you do decide to pay back the loan, the insurance company allows you to pay back the principal during the year before you pay interest. And most loans, really all loans, you're paying interest on the loan to the bank before you're able to pay down the principal of the loan. With life insurance, it works in reverse. You pay down the principal first during the year, and which ultimately, if you set up an actual like scheduled payment, results in less interest than you would normally have to pay if you were taking out, a conventional loan.
We've done this with my grandmother's account. So
Yeah.
Sorry. But yeah, taking out a loan against life insurance.
Yeah.
It's a lot easier than getting a loan from any bank.
Right.
Like it's insane. It's so easy. And if you have the money there, you can use it. It's a savings account basically for when you need it.
Right.
And for business owner last year, if you had the life insurance and you actually had equity in the life insurance, it saved your business.
Yeah, I mean, a lot of the business owners that I know of that had and all the business owners that are my clients,
Mhm.
they have and they used it too. So if they were in an industry that was negatively affected, they had access to the money, and so they could go and they could just borrow against the policy. And the insurance companies were actually they went to extra lengths to expedite loan requests because they knew that special circumstances. They didn't have to do it because they will typically say we can provide you a loan within so many days, but they were expediting requests because they had the cash, because they always make sure they have liquidity. They always are making sure that they have enough money on hand that they can meet all loan requests and cash any request for the cash, whether it's withdrawal or a loan. And they just kind of had a sense for the urgency. Mm-hmm. And so the way that life insurance companies look at these is they know that it's the policyholder's money, and it's just basically on loan for them to use and invest in a conservative way until the policy owner needs it.
That is a wonderful way to look at money. I wish more companies actually did that.
Yeah, it used to be it used to be more common. It did used to be very common that corporations would buy life insurance. It is still common to some extent. I mean, it's typical. The people who know about this and the people who do it it's usually something that like their parents taught them, or they have a friend that's doing it, or it's not so much in the large corporations anymore, but traditionally that was something that was very common. Corporations would all carry lots of cash value life insurance because it was a great source of liquidity. It was an easy way to tap into capital that they needed to expand the business, or to meet some sort of short-term cash need, or sometimes even it was a long-term cash need. If there's sufficient cash values, if the policy was designed to grow a lot of cash value, they would use it as the basis for their pension plans. And it provided, that guaranteed growth rate, which then they could take and turn around and use either an annuity or something else. And that would kind of smooth out the income that they could pay to their employees. They never had to worry about this thing with the stock market. Is the stock market going to use 7% or such or whatever? Are we actually going to be able to afford to pay these pension claims? That wasn't even a question, because everything in whole life insurance was guaranteed. They knew exactly how much money was going to be there. So there was no question as to how much they could pay their employees. So they could make them, a 30-year promise. When you retire, this is how much we're going to be able to pay you. No questions asked. We already know this is going to work, and they did. All of them did. So it was a lot less. There wasn't this with the 401k. Not to talk bad about 401ks, but it was different. It wasn't like this thing where there was a big question about a big question mark about how much is going to be available in the future. They knew how much was going to be available, so you could actually make a 20-year plan, a 30-year plan, and not worry about it. And that's just, it used to be that way, and then things changed over time.
Now, one thing, how did you get into selling this?
So that's a long story. How long we got? So I was approached by a large financial services firm, MetLife, which people may or may not have heard of. And they asked me if I wanted to come work for them. And at first I thought, I don't know, life insurance. I don't really know anything about life insurance. They said, well, we do a lot more than life insurance. Most of their business at that time, was in investments, and they did auto insurance and liability. And they still, they're one of the largest life insurers, and not just in the United States, but like worldwide, they're huge. So they basically, they had me come in, and after some back and forth, I decided to go work for them. And I just didn't do very well there. Like, I was not the star salesman. I was not really a salesperson. I was interested in kind of how certain products work, and I was interested in the process. Like, I was interested in how a lot of the like the mutual funds, like the inner workings of the mutual funds and how they worked, and the inner workings of the life insurance and how that worked. And I was really motivated to learn about that stuff, because years and years ago, I had this experience where I had been laid off from a job, and a bunch of my coworkers and I were sitting around in a restaurant, sort of, kind of lamenting the fact that we had just been laid off from these one of the highest paying jobs in the town where I lived. And basically, and this was right around like the .com bust. So there was a big run up in stocks in the late 90s, and then it all fell apart, right? It all kind of came crashing down. And a lot of people's retirement got ruined by that. And one of my coworkers was, we were sitting there in the booth in this restaurant, and I could just remember she was telling me, she looked at me, she said, "I lost everything. I can't retire. I don't know what I'm going to do." And I was very young then. I was in my early 20s, and I didn't know hardly anything about how financial markets work. I didn't know anything about the stock market. I knew that people contributed to a 401k plan. And because most of my coworkers were older than me, I heard more about it than I think maybe a typical 20-year-old would, because that's kind of what they were talking about on their lunch breaks and stuff when we weren't talking about, our work or something, or what was going on, with their kids at home or something. So that really got me though, because, she was a friend of mine. She was a nice lady. I just couldn't understand, and I couldn't understand in the matter of like a month or a couple of months, how her whole world just fell apart. And that always stuck with me. That planted the seed. So by the time I actually got to MetLife, I was thinking, man, you know what? Is there a way, and I was just motivated to figure out, how does this work? First of all, how do I keep this from happening to me? Was this a one-time thing, or was this something that's going to happen? Could this happen to me like 20 years from now, 30 years from now? And there was this one night where my boss, he took me out on a trip with him, and we were going to see a client of his, and he took me out to see, he had put together a financial plan for these people, and we went out to deliver the financial plan. And we got out there and he delivered the plan. It was like a thick manuscript. I mean, it almost looked like one of those old telephone books. It was huge. And he gave them the plan. He collected a check. We drove back to the office, and he said, that's what it's all about. That's what I want you to learn how to do. And I said, well, that seems pretty easy. I mean, it looked easy. There was a lot of work that went into it, off the kind of behind the scenes, but I said okay, so what did we just do? And he said, that's what you got to learn how to do. There's a lot, you get on the computer and you do all this stuff, and there's lots of graphs and everything in there. And I said, okay, so what did we just do? What did you just handed him this thing? He said, well, that's a financial plan, and that's going to map out a lot of different investments that they should be buying and all this other stuff. And I said, oh, that's cool. I said, I said, do people actually read all that? I mean, that looked like that's a lot. That's like a lot of reading material. I said, do people actually read that? He said, I have no idea. I said, but we just took like $3,000 from these people. I mean, they got to read it, right? And he said, they might. I said, so what did we do? I mean, really, what did we do here? And so we got back to the office and we kept talking. And I said, and I kept asking him questions. I'm not trying to offend him, because he's the one that writes my checks, Right. So I said, do you do this? Is this what you do with your money? He said, well, I mean, he said, I put money in our company 401k, and I buy some stocks and stuff like that. He said, but he said, most of the money that I save goes into our whole life insurance product. And when he said that, that hit me. It hit me like a ton of bricks. Here's a guy who's been doing this for 30 plus years, and he puts most of his money in this whole life product. I said, I gotta really buckle down. I gotta learn this stuff, Because if this is what this guy's doing, and he's basically set up, he was showing me, some of his financial accounts, he's basically set up for life. I got to figure this. I got to know what this is all about, because clearly this is what the experts are doing. They're not doing the stuff that they're showing other people.
Right.
And so that sort of started the journey, and that's when I really got serious about designing these custom whole life plans and really selling whole life insurance.
That is wonderful. And that's a way to look at it. I mean, sometimes you have to look at it from the seller's point of view. Sometimes you have to look at it as an investor's point of view, because no one that has money out there doesn't have one of these products.
Right. So
I mean, Warren Buffett, I can bet you he has a life insurance policy somewhere that he can borrow against.
Yeah, so Warren Buffett owns a life insurance company. I mean, that's the funny thing about it when people say like, oh, well, Warren Buffett advises people to just buy term insurance and invest in index funds. And meanwhile, Buffett owns an insurance company. So
and I just pulled his name off the top of my head. So
yeah,
it's serendipitous. But
right.
If you look at our billionaires or millionaires, they have money that they can pull against somewhere. They don't tell you where it's at, but at the same time, they have it.
Yeah. So they, I mean, the thing about life insurance that's kind of tricky is that unless somebody discloses it to you, you will never know that they have a policy. The policies are not reportable to the IRS. There's not even a place on your tax return to put a life insurance policy, because the cash values are considered to be tax-free in almost every case. I mean, there's some minor cases where you will be taxed on it, but it's not reportable to the IRS. And you don't have to disclose that you have a policy except under very limited circumstances. I mean, if you're a CEO of a Fortune 500 company or something like that, there's some certain reporting requirements you might have to meet. But for the average person, small business owner, unless you tell somebody you have it, nobody's going to know. And it's not like this super secret, like you're doing anything shady. It's just nobody. First of all, there's no regulatory agency or bureaucracy that cares, and B, it's not even, any forms that you'd have to fill out. It's not even a consideration. Nobody asks you for the information, and they don't want to know. It's not part of whatever formula that you're trying to figure out for taxes or for financial aid or for any of the regulatory stuff that you might run into. And so
it's a great way to hide money.
It's legal. Right. So I don't want to give people the wrong idea that this is some sort of like tax scam.
No, it's not. I mean, it's there for later on. It's just a little joke, Yeah. But it's a great way to build wealth, because you can borrow against it without, paying huge interest fees.
Right. Right. The interest that people pay, it's kind of funny because people have, some people have talked about this idea of using your life insurance policy as a quote unquote bank. So you could borrow money from the insurance company and then pay them back with interest. It's funny how that works, because you are, as a policy owner, if you buy a policy from a mutual insurance company, as a policy owner, you are in effect part owner of the insurance company. And then but as you use your policy, like if you're putting on a different hat as a customer when you're borrowing money from the company. So the interest that you pay, you borrow money, the insurance company charges you interest on the loan, you pay the interest back to the insurance company, which you own. So the money's sort of moving around in this circle. You're a customer when you borrow, but when you pay the interest back, you're paying it back as a policy holder. Once it gets back in the insurance company's hands, that money is effectively, money that is yours anyway. And so all that's doing is all the interest that the insurance company collects on those loans, that's considered profit to the insurance company, which they then turn around and pay back as profits, as dividends. At the end of the year when they declare their dividend rates. So it's interesting. It's just like the circle that goes around. And so it's just something that you can't take advantage of using anything else.
You really can't, because it's just an endless circle, and that's how it stays.
Yeah.
But we are almost out of time. So where can our listeners and our viewers find you?
Yeah. So if you want more information about what I'm doing, you can go to www.monogenics.com. So that's MONEGENIX.com. And I've got several hundred different articles that are freely available on the blog. You can peruse at your leisure. If you want to get kind of more in depth on life insurance and other related topics, then you have to join the email list. And once you opt in, you can get a free report called Why Successful Businesses Fail. And that is a very long special report. It goes into the financial, psychological, and also philosophical reasons why some businesses succeed and others fail. And so any business owner that's kind of looking for kind of shore up their finances and build more financial security, definitely feel free to sign up to the email list and download that special report.
Wonderful. Thank you so much. And thank you so much for being on the show today.
Thank you for having me.
And for all of our listeners and our viewers, happy reading.